So joining me now with whether those runs can continue is Paul Ciana, the head of technical research over at BofA Securities. So we brought in an expert to talk to us about the prices of Bitcoin and the prices of gold and whether or not those trends are things that can sustain over time or whether or not we're due for some kind of a reversal. So let's start, first of all, with the first chart that we're going to put up here. And that's going to be a little bit about the gold rally. This is a weekly chart showing all of those bars on a weekly basis, long term. So take us through what you're seeing here and what it tells you about gold prices.
So steadfast uptrend. The trend is your friend. We like to say that in technicals until it's about to end. Right?
Okay.
And that's the warning here is you have this very, very nice uptrend in gold prices, a nice upward slope 200-week moving average, and a very nice upward sloping trend line. But the problem begins here, here, and here. That's when the 14-week RSI was stretched well above 80, which is a very overbought market. And that is where we are right here, going into psychological resistance of about $4,000 an ounce on gold.
So is the thinking here that the previous historical patterns of price movements now indicate that we could be going back towards this orange line?
That's correct.
Okay, so if that's the case, what exactly is that level that you're going to look at target? Is it going to be right around that 3,500 mark, the way that we're seeing it right now?
I think that would be reasonable. It might be a little far for this market immediately. Another thing that we have up here is a systematic signal called the market signal, or TD sequential, very popular pattern amongst prices that agrees that trend is exhausted. So the first thing we'd like to see is a couple bars here that confirm resistance at about 4,000. Then that roll over towards 3,720, maybe even 3,500.
All right, so that's the idea here is on the weekly basis, we could see more of a pullback in the coming months, so to speak.
That's correct.
All right, so let's take the gold prices now and go over to the Bitcoin side of things because this has been a volatile. Oh, I'm sorry. Let's go 10-year first, all right? Sure. Let's go 10-year here and see whether or not we are seeing some movement because what we are seeing is a bit of a kind of almost consolidation or wedging in here. So how significant is this on a 10-year basis?
So converging trend lines is a symmetrical triangle, lower highs and higher lows. Right? So lack of trend in 10-year yields. They're continuing to coil up until they must eventually break out. The smaller pattern here broke to the downside, right? Just a little bit on that day. So I would say we have a long bias while that particular candle at about 4.5% holds as the yield resistance. We'd prefer to play from the long side.
Okay.
Right? But if we go above that, we're still in this longer-term consolidation, and we may be in that until year end.
So if we look at this, that means we kind of fill in this area right around here, right? As we kind of get in there.
With a modest bias to potentially go that way.
All right. So there's your 10-year look on a longer-term basis.
Right.
Let's now talk about the U.S. dollar. It's been the talk of the town for a while. Maybe not in a good way if you are long dollars against other currencies, but there's something shaping up ahead here that could be worth noting. Take us through the dollar trade.
Long-term secular uptrend in the dollar since the 2008 lows. And you can see this very nice trend line connecting to many of the bottom points in history. And what's interesting here is you have this big up move early on and 3 down waves. Big up move, 3 more down waves in orange, big up move, and 3 down waves. So the question is, do we get a small up move, at least in this dollar market, where everyone is still generally consensus bearish?
So this is also here. If we take a look at all of these other points, if you look at that dark line over here, it seems to act as a base or a bouncing off point, and you're seeing that again right here.
That's correct.
So could we see a move, and exactly what would you target in terms of how big this could go up?
At this point, we're trying to make the argument that we could retrace roughly a third to a half of that move. So that would be the dollar index up to about 102 to 103.
Just around there.
Yeah, and that's euro at a lower low than 113.90 from a couple months ago.